Hi, welcome back to the channel. My name is Dave, and today I want to talk about ticker symbol O, Income Realty Corp. Now, they started this company back in 1969, and in 1970, they bought their first piece of property, which was a Taco Bell. Now, when I go to Taco Bell, usually it's for the wrong reasons. It's usually at 1 in the morning, and it doesn't turn out well. But for these guys, it turned out pretty well because they took that single Taco Bell and they turned it into a $37 billion REIT. And this REIT pays out so much in dividends. Every single month they pay out dividends. And they've been doing it for 25 years, raising this dividend year in and year out. It's a dividend aristocrat. So I decided I needed to add some to my portfolio, and that's exactly what I did. I'm going to talk you through that trade. I also sold a covered call. We'll talk about that. If that is what you're looking for, please stick around. Whoop. Realty Income. They even tag themselves as the monthly dividend company. So you look at the about there. Realty Income, the monthly dividend company, is an S&P 500 company dedicated to providing shareholders with dependable monthly income. That's why so many people flock to Realty Income for that monthly dividend that gets paid out routinely, that they've grown over time. So, found in 1969 to provide investors with monthly dividends that increase over time. That's their goal. That's their mission statement. Dividends are supported by the revenue generated from our net leased real estate assets. So they focus on triple net leases. They buy real physical real estate. They rent it out to large box stores and all kinds, like Lifetime Fitness, for example. We'll go over some of the other ones here. But they do an outstanding job of maintaining these leases and generating a ton of income from this. Now, you can see all the highlights down here at the bottom, but you can see the important one is adjusted funds from operation, the AFFO. They've grown since 1994 from 39.2 million all the way to over 1.17 billion. That's as of 12/31/2020. So we'll look at updated numbers as well. And then that annualized cash dividend. So if you would have bought in way a long time ago, your 90-cent per share dividend would now be getting paid $2.83 per share. Pretty darn good. They've done an outstanding job growing this over time. Some other highlights from their website. 15.5% compound average annual total return since 1994 New York Stock Exchange listing. Wow. 619 consecutive monthly dividends paid. That includes the pandemic and everything else where you saw some other REITs had to take a step back. 4.5% compound annualized dividend growth since 1994 listing. Wow. 97 consecutive quarterly increases. So you can see how important this dividend has been to them. Then over 11,000 properties under long-term net lease agreements. 50 states, so really broadly diversified across all the different states here and the United Kingdom and Spain. 650 different clients and 60 retail and other industries. So when you buy O or one share of O, you're going to get lots and lots of diversity. Right now it's trading for about $66.63. Dividend yield, 4.44%. So with the structure that Realty Income has, you are going to be getting paid a monthly dividend based on past history. We can assume that's going to carry forward. And here's their top 20 client list. And I like a lot of these. I like 7-Elevens. I like Walgreens, Dollar General, FedEx. They're broadly diversified. They're across all 50 states here. Kroger, CVS, these are all great. Home Depot, I like those. Now, you do have to make sure that you are comfortable with some of these large box stores and you're not too concerned about what is known as the Amazon effect. I'm not too concerned here. Like AMC Theaters, not a big fan there. I live in a pretty nice neighborhood, and I was just at my local AMC theater, and I thought I was going to disappear into the seats at some point. So some of these need probably fixed up as we come out of the pandemic. But in general, these top 20 clients and how broadly diversified they are, I feel pretty good about it. I think they're going to be here in 10, 15 years. So I feel good going forward as far as their client list and their ability to keep these leases going. And if we check out portfolio occupancy, you're going to see 98.8%. They've had a great history here going back as far as portfolio occupancy and getting those leases signed. Total properties keeps growing, and vacant properties, obviously there's that spike back in 2020, but it looks like 2021 there has been improvement. So looks like the portfolio is performing pretty darn well. Real quick look at a 52-week chart. Started the year off right around $56. Now it climbed all the way up to $72 a share. It's pulled back a little bit to $66.63. I've already sold some puts against this. Looking at that $64 range right there to try to pick up some shares. If it doesn't happen, it's okay. I'll make my premium by selling my puts, but I don't think we're in too bad of a range right now to pick up some shares. So as I mentioned earlier, REITs are required to pay out 90% of their net income. Now, in order for them to do that, they need to have free cash flow. So what we're looking at here is their growth, but you can also see free cash flow trailing 12 months is listed down here at 1.28 billion. So they've got quite a bit of cash flow, but how much are they paying out in dividends? That's another good question to ask, and let's see if we can dig up the answer by pulling up some of their financial statements. What you're going to see here, if we look at this under operating activities, income before extraordinary items of $397 million. Then you have depreciation and amortization, and this is key, right, when we're talking about REITs, $688 million. So don't forget, we got cash flow of 1.28, and if you come down here to the bottom, we have cash dividends of $964 million that was paid out. This is for 2020, end of 2020. So they can't afford that, and we can see that again at another spot. So a good question to ask is, can they continue to support this dividend? So I went over here to Seeking Alpha because I do like their dividend tabs here. So if you click into O, and then you go to dividends, you're going to give it a nice little summary down here at the bottom. That's going to talk to you about that yield that we talked about and how much they pay out annually and their 5-year CAGR, right, compounded annual growth rate, and their payout ratio. Now, don't get too concerned about this payout ratio. Let's talk a little bit about that as we work across. But it has all these other tabs too on Seeking Alpha. This is just their free version that I'm looking at right now. If we go to dividend growth, you're going to see that 5-year compounded annual growth rate of 3.37% on their dividend growth. So nicely done. If we look at dividend history, again, you're going to see going all the way back, this is a 5 years. You can go back 10 years and you can just see how this thing's grown. Going back 10 years to where it was 14 cents, all the way up to today where it's 25 cents. So they've done a great job of growing that dividend. So if that's important to you, then you can see based on past history how it's performed. Now, dividend safety is the one that I really want to talk about because we've got two numbers here when you're looking at this. The first one's that dividend payout ratio that's based on how much money do we make, right? And we can't support that paying out 219%. But if you look above that cash dividend payout ratio, this is the one that's more important because this is one that's based on free cash flow. So based on free cash flow, when you adjust for amortization and depreciation, it's 82%. So much better. Now they still give it a sector relative grade of D, but based on past history, they've been able to support this, and I expect them to be able to support this going forward. So I think the dividend is safe when it comes to O Income Realty Corporation, and it's one of the reasons that people like it so much. One of the reasons that people flock to O Income Realty. I keep saying that. O Realty Income Corporation. So the question we should all be asking is it a good price right now at $66.63? Whenever I look at O Income Realty Corporation, I'll say it right, it always seems to be trading at a bit of a premium. Similar to, I guess, Starbucks, right? Starbucks trades right now at about a 28 multiple. Procter & Gamble trades at about a 27 multiple. If you were to compare that to something like Google, it's at 22 times right now. It seems really expensive because of Google's growth, right? They've incredible growth. So why would you be paying more for something like Starbucks and Procter & Gamble? Well, I own both of those. I own all three of those. So why would I be paying a higher multiple for that? Well, it's just because of the consistency. It's because right now it just still feels pretty rock solid. When I look at O Income Realty, it always seems like it trades a little bit of the premium because people love that dividend and they've shown consistency year in and year out. So there's not a wrong time to buy Realty Income Corp, but there's definitely times when I think it's a little bit more overvalued than other times. And I think right now it's probably properly valued and something that I might pick up a few shares. But the way I'd probably play this is by buying and selling the covered call or selling puts at a price that I feel even more comfortable with. So what I did with this particular trade is I went out and bought 110 shares, 100 to sell a covered call against and 10 to stick in my back pocket. Just hold on forever, right? That's the kind of trade that I like to do. So with that 100 shares, I don't know how much upside I see over the next 10 months. So I'm looking at buying the $66.63. If you bought it right now, I would buy that 110 shares or 100 shares. And I would put that in my portfolio, and then I'd sell this covered call. Sell to open, one call contract, January 20 of 2023, about 10 months from now. Expiration at a $70 strike price. So I still have some upside, right? And for that, I'm going to get about $350. And that's the kind of trade that I like with these types of things, because every month I'm getting that dividend and I'm collecting that $350 right up front. And I have a little bit of upside because I have all the way up till $70 a share where I'll be making money on the growth of that stock. So I like that way to play this. Now let's work through the math real quick and I'll pull it up here for you. So this is a covered call calculator that I pulled together. So this is how I see this trade breaking down. Today's date, selling one contract of O with an expiration of 1/20 of 2023. Current price, I'm selling a call at a strike price of 70, which means I've got 5% to the upside from its current price where I bought it at. For that, I get about $352.35 estimated. This is on the weekend, of course, so we're just kind of putting numbers there. We don't know what the market's going to do tomorrow, but with it being so far out, it should be pretty darn close. So to buy those 100 shares, it'd be $6,663. I will hold that for about 337 days. My return on the cost, basically this divided by this, is 5.3%. Annualized return, 5.7% on this actual $352. Now, let's start looking at the dividends and adding in everything else here. And we start seeing the dividend rate, 25 cents per month, pays out 12 times a year. I would only receive 10 for the rest of the remaining of the year, which means I'd collect $250 in dividends between now and this expiration date. Everybody following me? If you have any questions on any of this, just ask down below. Now, if this stock trades above strike price by the expiration date, then we're going to have an estimated gain of $337 because we sold it at 70. Get the dividends of $250. We get the premium we collected. So we have a total return of $939, which is about 14% or 15.3% annualized. I like this trade. This works well for what I want to accomplish within my own personal portfolio. Now, if the stock price falls, and we say, let's say it goes to $62 this year by the end of the year at expiration. Well, in that case, we would lose $463 on the stock falling from 66 to 62. But that's a paper loss. We haven't sold it yet, right? Got $250 in dividends, $352 in premium. So we would have made $139 or a small 2% return or 2.27% if we annualized it over the course of the whole year. Then what's our break even? So this is, worst case, not worst case, but this is our break even position. So if the stock was to fall to $60.61, then we would have lost $602.35, which is an equivalent amount to that dividend and that premium. So I'm trying to break this down in sense of how do you feel about this trade? And this is the evaluation that I would typically go through. I would look at it and say, okay, well, here's my price right now. Can I tolerate it if it drops to $60.61 and I make nothing this year? Knowing that that's my new break-even price because I sold this call. And I like that. So that's why I did this trade in the first place. And that's kind of what I look for going forward. And hopefully that helps you kind of visualize how you can use options in something that you might not see a ton of upside, but you do want to get into that position and you feel like, okay, this might work out really well. So you can kind of see that breakdown and you have to decide for yourself, are you comfortable with this trade? So that's an example of a trade that I like with O. There's a bunch of other great REITs out there too, like Store Capital. I also traded some with that one. I'll be doing a video on that shortly. So if you're interested, please like and subscribe for that one coming up. I also sell puts. So I've already sold a put against O at 65. So if it continues to drop, I'll continue to add my shares to this position. I like the income that I'm going to generate from this, and it fits my criteria. It fits my goals. I just did a video about trying to pay off my mortgages and I didn't want to pay it off with the cash that I had. I'd rather look for opportunities like this where I can get maybe a nice solid return, feel comfortable about the trade, and pay that off as I go along. So that's always kind of what I'm looking for and why. I'm not trying to 2x, 3x, 4x every time. I'm looking for good solid trades that I feel like can put money in my pocket over the long term. So whenever you think of O, think about that first Taco Bell that they owned and how they added that to their portfolio and they slowly started to grow this thing. Now you could go out and you could buy a few shares and you could start collecting those dividends and you could get this whole wealth building thing going for you. You could start growing your own huge $37 billion market cap or you could go there at 1 a.m. tonight and cry about it and get the double chalupa and some heartburn. It's really up to you. But either way, If you found any of this beneficial, please like and subscribe to the channel. If you have any questions, ask down below. See you next time. Take care. Whoop.